Hello everyone. In this video, I'm going to walk you through the body of Chapter 14. In Chapter 14, we'll continue working with Your Name Service Merchandising Company. We'll start by reviewing some of the inventory defaults that we set up in Chapter 12 and look at a few additional inventory item default settings. These defaults determine what information automatically fills in when you create new inventory items, and they help speed up setup and keep things consistent, though you can always adjust them for individual items if needed. After that, we'll add a few new inventory items along with their beginning balances, then we'll start recording transactions. You'll see how to record purchase of inventory, make an inventory adjustment for goods that were damaged and not returnable to the supplier, and we'll record both the sales of inventory and sales of services, including credit sales and cash sales. We'll also record receipts of payments on invoice, we'll write a check to cover the principal and interest on a loan, and we'll record some owner withdrawals. Finally, we'll run a series of reports that summarize our activity, including the purchase journal, the cash receipts journal, the cash disbursements journal, the customer ledgers, the vendor ledgers, the cost of goods sold journal, the inventory adjustment journal, and then the general ledger trial balance, a whole bunch of reports. At the end of the chapter, you'll have a chance to complete similar work on your own using the Your Name Sales and Service Company. So let's get started here in Sage. So if you're using the virtual environment, you're going to restore your backup file by clicking on File and then Restore, and then browsing for the J drive where you've stored that backup. If you're using your own computer or maybe a loaner laptop, you can click on Open an Existing Company, and from the list you want to find the most recent Service Merchandise Company. And look at the time and date stamps, should be at the top of the list, and then click OK. So we're going to start off here by taking a look at those inventory defaults, and to do that we're going to go to the navigational menu and select Inventory and Services, and then we're going to select the Inventory Items button and then select Set up Inventory Defaults. You may remember from Chapter 12 when we set up our inventory defaults that we'd specify the default item class, and there are 9 different classes that we can specify here. We selected stock item. A stock item, if you remember, and I talked about this way back, I think it was in Chapter 5 where we first encountered inventory. A stock item is an item that the business tracks quantities of and resells to its customers. There are several different other classes, including classes for services. So these are not really just inventory items per se. They also include service items that could be included on invoices as well. But we set the default item class to stock item. And what that means is that when we create a new item in our item list here, that it's going to autofill with the class of being stock item. We can always change that, but that's what these defaults do. We're not going to change that for right now though. Just want to verify that our item class is still set as stock item for default. And we want to check a couple of other settings. So I'm going to click on the General Ledger Accounts and Costing tab, and here we can see that for our stock item as well as some of these other item types, we have set up the costing method as the average costing method. Now if I click on that drop down, you can see that Sage can handle FIFO, LIFO, and average, and we're just going to make sure that these are all set to average. This is something that we did do in Chapter 12, but we want to verify that that's still set up that way right now. So if it's not, make sure that all 3 of these are showing the average costing method. And then if you want more detail about these different item classes, you can review my video in Chapter 5. Alternatively, the text does describe them in Chapter 14. It looks like they are described on page 520. And then these costing methods of FIFO, LIFO, and weighted average, you probably have discussed these in your financial accounting class previously, but these are also discussed in the book starting on page 518 for a little bit more detail. But for right now though, we just want to make sure that these 3 are set up as using the average costing method. And then I'm going to click on the Taxes and Shipping tab. And here what I want to make sure is that the default tax type for all new items is set to regular, which means taxable. So make sure that that checkbox is there. If it's not, click on it. And then also on this screen we can see that we can set up default shipping methods for different items that we might sell and ship to our customers. We're not going to change anything here, but if we needed to, we could. So once we made sure that these settings are matching, so that the default item class is a stock item, that all three of the items where we can select a costing method are set to use the average method, and then the default tax is set to regular, then click OK to save those settings. So the next thing we're going to do is we're going to add another item to our inventory list, and to do that, if we're on the Inventory and Services tab, we can click Inventory Items and then select New Inventory Item. So the inventory item that we're going to set up is going to be light fixtures, and the details for this inventory item are on page 524. So I'm going to enter those details now. So you can see here that I've entered the item ID, description here, as well as a more detailed description down below. Set the price level, set the last unit cost. The default cost method shows as average. Did create a new item type of lights. The stocking unit of measurement is we're keeping track of each lighting fixture individually, so we wrote the word each. We want to make sure that the general ledger sales account is mapped to the correct revenue account. So if we click on that magnifying lens, make sure that we select the sales for lights account. The general ledger inventory account should be defaulting to inventory, but if it's not, make sure that it is, account 12,000 there. And then for the cost of goods sold account associated with this inventory item, we want to make sure that it's mapped to the correct account there as well. So if I click on that magnifying lens, I should see a 57,050 cost of sales for lights account there. By default, the item should be taxable. It should show a code of 1 here for the item tax type. And then we entered the values for the minimum stock as well as the reorder quantity. We also needed to add a new vendor to the system. So to do that, you click on the magnifying lens and then you click on new. And once you do that, you are going to set up a new vendor. The vendor is called Tom Sales and Service. The details of this vendor start on page 524 and continue on to 525. When you set them up, make sure that you set their 1099 type up as an independent contractor, and then the expense account should default to inventory. That should automatically be done, but make sure of that. And you're going to put in their contact info, and then if you go to the purchase info tab, you're going to enter their tax ID number. Once you've entered all that vendor information, make sure to hit save to save the vendor to the system, and then you can close out of the maintain vendors window. And then once you've done that, you can go back into your maintain inventory item here, and you can select Tom Sales and Service as the primary vendor for this particular inventory item. After you've done that, you're going to click on the beginning balances link here, and you're going to find that new inventory item, the lights. And then you're going to set up the beginning balances, because when the company transitioned to using Sage, it actually had quantity of this inventory item at that time. I'm not sure why the author didn't have us do this at the beginning of chapter 12 when we first set up the company, but maybe it's just to see if we remember how to do it. I'm not certain, but we're going to go in here and enter the details. The details about the beginning balance are on page 525. It says that we started with 125 of these lighting fixtures, and the unit cost per unit was $64, and we do that multiplication and we should see a total cost of $8,000. And then this table down below, it's still showing as zeros, but as soon as I click on one of the other items, those values have updated, and I can see that the total beginning balances for inventory is $27,740. So make sure you're matching up with that, and once you've got that detail entered, click OK to save the beginning balances. And then we also need to save this inventory item to the system, so we want to hit save here as well. And now that we've done that, we can close out of the maintain inventory items window, and we can begin recording transactions. So the first transaction that we're going to record is going to be for the purchase of some light fixtures from Tom Sales and Service, the vendor that we just created. So the details of the transaction are on page 526, And to record the transaction, we're going to go to the vendors and purchases area from the navigational menu, and then we're going to click on enter bills and then new bill. Now before I do that though, most of the time inventory workflows start with a purchase order, and then once those goods are received, we enter a bill at that time. But the book is sort of skipping that normal process for inventory here, and we're going directly to enter bills and then new bill. All right, so per the book on page 526, the date of this transaction is January 14th, so we specify that. The vendor is Tom's Sales and Service, so we find them from the vendor ID list. There they are. And we do have an invoice number provided by Tom here. It's 112. And we are going to enter the details about what we're purchasing. It sounds like we bought 8, so we're going to enter a quantity of 8, and what we purchased were light fixtures. So we go to our item list here, and we can see the light fixtures there. Once we select the light fixtures, the unit price auto-fills and the amount auto-calculates. You should see a total here of $512. Make sure all of your details match up with this screen, and once they do, we'll hit save to save the transaction. And we'll move on to our next transaction so we can close out of this window. And the next transaction says that 2 light fixtures were damaged when they were dropped on the floor by the owner. This is described on page 527. So we can't return these items to our vendor. They didn't send us defective items. We dropped them in our business. So this is not something that we're going to be able to do a vendor credit memo on. No. Instead, what we're going to have to do here is an inventory adjustment. So to do that, from the navigational menu, select Inventory and Services, and then click on the button that says Inventory Adjustment. So here we're going to find the inventory item that was damaged. It was a light fixture. So I'm going to click on that magnifying lens, find the light fixtures. And when I did that, some information auto-filled here. Now the quantity isn't matching the screenshot in the book. The quantity on hand before this adjustment is not matching. I think that's because of the date that we're specifying here. So I want to go with the date of the transaction per the book. This transaction was on January 16th, so I'm going to select that. And now the quantity is matching the details from the book. Before this adjustment, the Sage records were showing that we had 133 of these light fixtures, but we just lost 2 of them due to damage. So we're going to put a -2 in for the adjust quantity by, and that's going to reduce our quantity on hand to 131. So you should see the new quantity showing up as that. We are going to type a little reason in here for the adjustment. We're going to write something like 2 damaged light fixtures. And there is a journal entry behind the scenes of this screen. We don't have a journal entry button like we often do. But what's going on here is that we're reducing our inventory account. That's an asset, so that would be credited to reduce it. And then the other part of it is that we're increasing our cost of goods sold expense. And that's reflected here in the general ledger source account. If I click on that magnifying lens, I can see that. Yep, we're charging the cost of the damaged light fixtures to cost of sales lights, $57,050. So make sure you're matching up with that. And once you have the detail in here, you can save the transaction, but not before you enter your initials here for the reference. Because you're supposed to be Shannon, I guess, in the the Shannon Larson. In the book it says SL. We're going to use your own initials. So BD is mine. And I'm going to save the transaction now, which posts it, and then I can close out of the inventory adjustments window. So the next transaction that we're going to record is described on the bottom of page 528, and actually it's a series of transactions that continue on to page 529. So it's going to be several transactions in a row. And it says that the first transaction is one in which we sold doorknobs on account. So if we're making a sale, we want to go to the customer and sales area of the navigational menu. And if we're selling on account, then we have to send the customer a bill. We have to send them a sales invoice. So I click on that and then new sales invoice. And the customer that we're selling to is named Eileen Finney. So from the drop down here for customer ID, I'm going to find Eileen. There they are. The date of this transaction is January 18th. So I'll specify that date. And it looks like we have an invoice number of 106. So we'll type that in. And then what we sold to them was a quantity of 2, and it was doorknobs, and it says in the book that doorknobs are classified as hardware in our inventory system. So we selected that. Once we selected that, a bunch of details filled in, including the unit price and the amount and the general ledger account. And what we should see here is a total value of $324,000. And also for this general ledger account, if we set up the inventory item correctly, it should be mapping to the correct account, but we can verify that by clicking on that magnifying lens. It should post to the sales hardware account, which it did. So once all those details are matching on your screen, we can save the transaction and move on to our next one. So the next transaction is also a sale on account. This one is to Denise Cobb, so we're going to click on the magnifying lens and find Denise. The transaction is also on January 18th, so that doesn't need to be changed, and the invoice number auto filled with 107, that is accurate, so we don't need to change that as well. So then I'm going to indicate what we sold. It says we sold 2 rolls of vinyl flooring, so we're going to type in a quantity of 2. For the item, we're going to click the magnifying lens and find the one that corresponds to the vinyl flooring, which is 003 floor. And once we did that, the unit price and the amount have auto-calculated and the general ledger account auto-filled. If I look at that, I want to make sure that it's mapped correctly. This is based on the setup of that flooring, and it looks like it was set up correctly. It's charging it to the sales for flooring account, so that's good. And then the total here is $320. There's no sales tax, and the reason being is that the customer's location is in Florida and we're in Arizona. Now, I think I mentioned earlier that there was a recent Supreme Court case. I think it was from 2018. The U.S. Supreme Court, in the Wayfair case, decided that states can require remote sellers to collect sales tax if they do a significant amount of business within that state. The concept is called economic nexus. It's a little bit beyond the scope of the class, but the book sort of glossed over that. Maybe that law hadn't been decided in that court case as of the printing of the book. But anyhow, just because the customer's in a different state doesn't mean that the business is not going to be responsible for collecting that sales tax. If we do a lot of business, it's possible that we could be responsible for collecting sales tax and remitting it to the state of Florida. So I just want to mention that. We're not going to do that with this transaction, but it is an important concept to understand. Once your details on this screen match up with mine, you can save the transaction and move on to our next one. The next transaction is also a sale on account, so we're going to stay on the sales invoice screen. And this one was to a customer named Peter Martin. So we're going to select Peter Martin there. And this one is also on January 18th, so we don't need to change the date. The invoice number auto-filled. This is accurate. Invoice number 108, and what we're selling to Peter are a quantity of 2. So type in that quantity, and what we're selling are pairs of curtains, and the text says to select the wall item as the curtain there. So we did that, and the unit price and the amount have auto calculated. You should see a total here of $216. We should also verify that the general ledger account was set up properly on the wall item, and we can click on the magnifying lens and verify that. Yep, it's posting to sales for the walls. So we're going to make sure of that. And then we can verify all of these details, and once they're verified, we can save the transaction and move on. So in the next transaction, it says that the company completed repair work for Betsy Bauman. So we did some work, but this time we're not selling goods, we're selling services. It implies that we're doing it on credit because it says that the invoice number is 109. So we're doing this on credit. The date of the transaction is January 21st, so we'll make sure we'll select that. Since this is a sale of a service, we need to change the way that this screen looks a little bit. So on the layout button, you can see that the checkbox is next to predefined product. Since we're selling a service, we're going to select predefined service, and we can see that this screen has changed with different columns now. So what we're going to do here is we're going to indicate the general ledger account, so we want to make sure it's mapped to the correct account. The book says, hey, use the 40,600 service fees revenue account there. So we select that. And services in this state apparently are taxable, so we're going to leave the taxation setting at 1 there, which means taxable, and then we're going to type in the amount. And they said the amount before tax was $75. The tax did not auto calculate, and that's because I have to come down here in the sales tax area, click on this magnifying lens and select Arizona. So once I do that, I see a sales tax of $6 and a total net due of $81. So make sure that you're seeing that as well. And then we'd also type in a little description of what we're doing. It just says repair work. That's not very descriptive. I'm just going to type repair work in there, but usually we'd be more descriptive and describe exactly what we're doing for this customer. Also, I forgot that I should indicate the customer here, so I'm going to do that. So selecting Betsy Bauman. So then we can verify all the details. Betsy Bauman's the customer. The date's January 21. We got invoice 109. We've got the general ledger account set to $40,600, which is our service fees income. We've got the amount at 75. It's taxable. The amount of tax is $6. The total is $81, and a short description of the service that we provided. Once all those details are set up in that way, we can save the transaction and move on. All right, the next transaction is on January 23rd, and it says that it's a cash sale. So cash sales do not get recorded on the sales invoicing screen. This is for credit sales only, whether it's service or product. Only credit sales go on this screen. So I'm going to close it out. Instead, since we're doing a cash sale, we're going to skip right over here to receive money and then select receive money from a customer. The date of this transaction is January 23rd, so we'll select that. We want to make sure that the funds are being deposited to our interstate bank account. If you need to change that, you can by clicking on that drop down. For the check or reference number, since this is a cash sale, we're going to type the word cash. For the name of the customer, we might not know it. If the book doesn't provide it, we're going to type the word cash in there because that's a required field. The deposit ticket ID is going to match the date. And now we're going to indicate the quantity in the item that we are selling for cash here. So it says that we sold 10 pairs of curtains. So we'll type 10 for the quantity. And for the item, I'm going to select wall. Once I did that, the unit price and the amount have auto-calculated. And I should verify that the general ledger is pointing to correct account, sales for the wall. In addition to selling the curtains, it says that we also sold some doorknobs. So we're going to put the details here for that. So we sold a quantity of 2. Doorknobs are classified as hardware in the inventory system. And once we did that, the amount has auto-calculated. And we want to make sure this line item is mapped to the correct revenue account. So I click on that magnifying lens, and these doorknobs are classified as hardware, so it should be pointing to the 40,000 sales for hardware account. The sales tax is not showing up here, so to make it show up, I have to click on the magnifying lens next to the sales tax field here, and then select the state of Arizona. Once I do that, I should see a total sales tax of $104, and then the receipt amount up here includes the sales tax. You should see the same $1,404 here. Once I have the screen looking like this, I'm ready to post the transaction, so I'll click Save. Our next transaction is on January 25th, and it says that we received a check in the amount of $324 from Eileen Finney in full payment of an invoice. So we're collecting on account. So if we collect on account, we're also going to receive money. So you go to receive money for cash sales. You also go to receive money when you collect on account from a sales invoice. So we're already on the receive money screen, so we don't have to move. So we're going to put in the date. So the date of this transaction is January 25th, and we are collecting from Eileen Finney. So for the customer ID, we're going to find Eileen Finney. Once we did that, the Apply to Invoices tab became active because there's an open invoice related to Eileen, and we're going to select that invoice. But before I do, I'm going to enter some other details. So we have the deposit ticket ID, which is going to match the date. And then for the check or reference number, we're going to indicate the invoice from which we are collecting, invoice 106. So now those details have been entered. Now I'll check the box. If I check the box before I enter the details and then I go and enter the details, the box becomes unchecked. So that's why I did it in that particular order. So now that I check that box and I want to verify that the receipt amount shows up here at $324. And once I see that all these details are matching up, I'm going to save the transaction to post it. Our next transaction is a similar transaction. We're collecting on account from Peter Martin. And this is also on the 25th, so I don't need to change the date, but I will enter that date for the deposit ticket ID. And then I'm going to select Peter Martin from the list of customers here. Once I did that, the Apply to Invoices tab became active. Before I come down there, though, I'm going to enter some other details. We are collecting on invoice number 108, so we're going to enter that for the checker reference number. And then we're going to check the box to show that we're collecting on that invoice. The receipt amount is showing at $216. We are collecting that full amount, so we're going to leave that as is. And now we're going to click Save to record the transaction. Our next transaction on page 529 is one in which we're writing a check. It says issued a check. So we're going to close out of the receive money window, and instead we're going to go to the banking area from the navigational menu, and then we're going to select write checks and then new check. So we're writing this check to our mortgage company. Now, the mortgage company is called CRW Mortgage. They're not in our vendor list, so we won't be able to select them there. What we're going to do here is just type their name into the name field on the check. The date of this transaction is January 29th, so we'll set that up. The check number is provided to us. It's check 3039. We'll type that in. The amount of the check we're going to type in here is a total of $685.80. And then this is paying both the interest and the principal on the loan for the month. So because it's going to have to be split up between two different accounts, I have to hit the split button. This is the first time we've done this. And now I have to indicate, hey, I'm paying partially towards the principal of my loan and partially towards the interest. So I'm going to click on the magnifying lens in this first row. I'm going to find the liability account that represents what we owe on this loan. So I'm going to select the mortgage payable, and then the amount of the payment that applies towards the principal is what we're going to type here, and that's going to be per the book $587.95. And then the remainder, which is system calculated for us, $97.85, which matches the book. That's the amount of the payment that's applied to interest. That'll be an expense to our business, so I need to find interest expense in my list here. There it is, $67,500 is the account number. And once I have that split set up correctly, I'm going to click OK. And now I am going to check these details, make sure this is coming out of my interstate bank account. If it's not, I'll select it here. And once these details are all set, we can click Save to post the transaction. The next two transactions in the book are both on January 29th, so we don't have to change the date, and they are both checks, so we don't have to get out of the screen. The first one is check 3040, the check number autofilled, that's correct, and it's a check to the owner, Brian Stewart. So we're going to type his name into the name field. So the owner is withdrawing money for personal use. The amount is $500. We'll type that in. And then the account that should be charged for that is drawing account for that owner. So it was Brian Stewart. So we should be selecting the account number 39007, Brian Stewart drawing. And once all these details are matching, we can click Save to move on to our next transaction. So our next transaction is for check 3041. It's on the same date, and it's the other owner who's withdrawing money, and it's withdrawing $500. Now the other owner is you, so you type in your name for the name field, and then the account that we should select here is going to be the drawing account for the other owner for you. That should be account number 39009. Once these details are matching up, click Save to record the transaction. And that looks like the last check that we're going to be writing for right now. So I'm going to close out of the Write Checks window. And the next transaction is another cash sale. So to record a cash sale again, we're going to go to Customers and Sales. And since we're receiving the money right away because it's a cash sale, we're going to go here. If it was a sale on credit, we go to Sales Invoice. But since we're getting cash at the point of sale, we're going to select Receive Money and then select Receive Money from Customer. All right, so here we're going to put in some detail here. So for the name, we're going to type the word cash. For the checker reference number, we're also going to type the word cash. And the date of this one is on January 30th. So we'll select the date in the date field. We'll also type the date for the deposit ticket ID. So now we're down to the Apply to Revenue tab here. And per the book, it sounds like we're selling 8 doorknobs and 10 pairs of curtains. So first we'll do the doorknobs. So type that quantity. The doorknobs are classified as hardware, so we'll select that. and we'll verify that the general ledger account is posting to the sales for hardware. It is, and then we can see that the amount is auto calculated. You should be seeing $1,200 there. And then we also sold 10 pairs of curtains, so we'll type in that quantity. Curtains, when we click on the item magnifying lens, are in the wall inventory item group, so we select that, and the system auto calculated an amount there at $1,000, so that's what we should be seeing here as well. And then the sales tax is showing as 0, so we need to fix that. So to fix that, we come down here to sales tax, click that magnifying lens, and then select the state of Arizona. We can see a sales tax now of $176, which matches the book. We also see a receipt amount of $2,376, which also matches. So make sure that all these details are matching up, and once they are, we'll click save. All right, so that was quite a few transactions that we recorded in a short period of time there. We're sort of bouncing around with different types of transactions, just like a real business would. So if you remember, for sales, if we're doing a credit sale, we go to sales invoice first. If it's a cash sale, we go to receive money. When we collect on those credit sales, we also go to receive money, but then we have to tie it back to that invoice. There are a few other transactions intermixed there, but those are the main ones that I see students make mistakes on commonly. All right, so now we're going to run some reports that reflect some of the transactions that we've recorded in the last 3 chapters. So the first one we're going to run is our sales journal. So to run it, we go to reports and forms and then select the accounts receivable category. And then from here, we're going to find our sales journal. Double click on that, pull up that report. When we look at that report, you should see the same total here, $3,868.88, and then all these details should be matching up with yours as well. So take a moment, compare yours against this, and if we're matching, then you're good. You can move on. You want to, if they're not, then you have to figure out why. So you're going to want to save this PDF, use the naming convention that's on Canvas for this assignment, because you're going to be submitting a whole bunch of reports. I need to know which company it's coming from. Right, so once that's good, we're going to close out of this and go on to our next report. So, actually I should mention something. So the sales journal is just showing sales on credit, so it's showing all the credit sales. So every one of these journal entries is going to have a debit to accounts receivable and a credit to different income accounts, and then if it's a sale of goods, it'll also involve inventory and cost of goods sold. But to be on the sales journal, it has to be a credit sale. All right, so the next report that we're going to run is going to be our cash receipts journal. That's also in the accounts receivable category. Here it is. We'll double click on it. So the cash receipts journal is going to show every transaction during the period that involved an increase to the company's cash account. So every one of these is going to have a debit to cash. So when you look at your report, make sure these totals match up first, and if they don't, then we have to look carefully at the details. We should also look at the details, make sure they're all matching up. So take a moment to do that. If your report's looking good, you can make a PDF, give it an appropriate name, and submit it on Canvas along with all the other reports. The next report that we're going to look at is going to be our customer ledgers report. That's also in the accounts receivable category. Here it is. I'll double click on it. So the customer ledgers is showing all the detailed account receivable accounts for all the individual customers. So here we see all the activity within Eileen Finney's accounts receivable account during the period. The balance is a running balance, so I'm looking here at the ending balances. So Eileen at the end of the period did not owe us, but we can see that Betty Bauman owed us a little bit, as does Denise Cobb, as does Judy, as does, nope, Peter was zero balance there. So if we were to sum these 3 amounts together for Betsy, Denise, and Judy, it would give us $782, and that is the balance of the control account for accounts receivable. So on the balance sheet, when we show the balance of account receivable, that's what it's going to show, and it's made up of these individual amounts that these customers owe us. So make sure that all 3 of these totals are matching up first, and then look at the details and make sure that your report looks like this one. Create a PDF of it and submit it on Canvas. So our next report is going to look at activity with our accounts payable account. So I'm going to click on the accounts payable category, and we're looking at the purchase journal next. So the purchase journal is showing all the transactions in which we increase our accounts payable. So anytime we entered a bill, a transaction would show up here. In this case, it looks like all of our bills were related to the purchase of inventory, but we could have bills for services as well. Make sure that your totals are matching up, and then check all these details. Make a PDF of the report, include it in this week's submission. The next report is going to be our cash disbursements journal. That is also in the accounts payable category. Cash disbursements journal shows all of the transactions during the period in which our cash account decreased. So every one of these is going to have a credit to cash. Look at the details here, make sure the totals are balancing with yours, and then compare your report against this one. Once you're satisfied, make a PDF of it, include it in your submission with an appropriate name. The next report that we're going to create is going to be a vendor ledgers report. This is similar to account receivables customer ledgers report. This is the subsidiary ledger of accounts payable. It's showing all the individual account payable to all our different vendors and the activity during the period, as well as the ending balances. It looks like at the end of the period we did owe James Jarvis, and it looks like we own Tom Sales and Service. So if we add the balances of those two vendors' accounts up together, that gives us the total that we see down here. If we were to look at a balance sheet, this is the total that would be listed as the balance of accounts payable. So the accounts payable is the control account. This is showing the subsidiary accounts that make up that account payable control account. Make sure that your three totals are matching up, and then compare all these details and make sure that they match as well. Click on the PDF button, create a report, give it an appropriate name, and submit it. We're getting down the list. I know it's quite a bit of reports this chapter, but we recorded quite a few transactions. So our next report is going to be our cost of goods sold journal. So that is found in the inventory category. And here we have it, cost of goods sold journal. We'll double click. The cost of goods sold journal is going to show every transaction that impacted our cost of goods sold during the period, including any decreases to cost of goods sold that may have come from a customer return. Compare your details, make sure these totals match up. Also look at all the individual amounts and make sure they're matching up as well. Create a PDF with an appropriate name and include it in your submission. The next report we're going to run is going to be the inventory adjustment journal. We did record an inventory adjustment for the product that the owner damaged on accident, and if we take a look at that, it's only showing the one transaction there. So make sure that you're seeing the same two totals, and you're seeing the same details in terms of quantity and accounts being debited and credited. And once you're satisfied, make a PDF of it, give it a good name, and include it in your submission. Okay, so our next report is going to be an inventory profitability report. That is also in the inventory category of reports. Here it is. And this is going to look at each item of inventory. It's going to tell us how many of each were sold during the period, as well as the gross revenue, the cost of goods sold, the difference being the gross profit, expressing the gross profit as a percentage of the sales. Then it also breaks down the gross profit as a percentage of the total gross profit for each line item to look at how each line item contributes to overall gross profit. That's what this percentage of total column is doing. Compare your report against this one and make sure they match. Make a PDF, give it a good name, include it in your submission. Then our final report is going to reflect on all the activity that we've done so far with this service merchandise company, and that's going to be your general ledger report. So I'm going to click on the general ledger category, and we're going to pull up the general ledger trial balance report. And when we look at that, first compare the totals that you see at the bottom, and then compare all the individual details and make sure you're matching up. Make a PDF of it, give it a good name, include it in your submission. So we made it to the end of chapter 14. That was quite a bit of content again. Now it's going to be your turn to get into your sales and service company and enter similar transactions. There aren't going to be as many, but there will be quite a few. Just be careful when you're bouncing back and forth between credit sales and cash sales and sales of merchandise versus sales of services that you're referring back to this video if you get stuck, or the text as well. They got screenshots of the stuff in the body of the chapter. But what you see at the end of the chapter should be similar to what we just did. And before you do that, though, you're probably going to want to make a backup of this company file just in case you have some problems down the road. So go to File, Backup, and click backup again. Then you're going to browse to a location where you can easily locate your file later. If you're using the virtual environment, save it to your J drive. If you're using your own computer or a loaner laptop, save it to a spot that you can remember to find it at. Documents, desktop, or downloads is usually what I recommend, and save that backup. When you're ready to switch over to the exercises, make absolutely sure that you're in the correct company. Always look at the top here and look at the company name here. Make sure which company you're in, and we want to switch to the sales and service company now. So we're going to go File, Close Company, and then you're going to open an existing company or do a restore depending on how you're doing things, and you're going to find that sales and service company and get started on the work in the exercises in chapter 14.